Hey, good afternoon. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so what's happened this week is that I've had a lot of inquiries come through, whether it's on YouTube or whether it's on Twitter or Instagram. A lot of comments have been made as to why has the market shot up so much in the US and in Europe when inflation is going through the roof. Okay, so I thought what I'd do is I'd take a bit of an opportunity on a bit of a more established setting within a studio on YouTube, rather than doing it in my car, which is Driving Markets, because I'm talking about markets as I'm driving. So to give you a little bit of background and dig a bit deeper into the numbers this week to see if that will help you out and understand what's actually happened with equity markets and why they bounced so much. Okay, so let's kick off and let's see what is driving markets. Okay, right. So on Wednesday, if you remember, you had the PPI, the Producer Price Index. Now the Producer Price Index is really the inflation measure at manufacturing level or producer level. In other words, what does it cost, or what's the price increase from the manufacturers to get those goods from manufacturing through to the retail sector, through to the part where you and I go and buy that good, whether it's online, internet sales, shop, or just in a marketplace. Okay, so the Producer Price Index was expected to come in the US at 0.2. That was a 0.2 increase on prices, greater than the previous month. In fact, they came in at 0.4. And when they came in at 0.4, the market was pretty shocked, and the equity markets moved all over the place and the dollar began to jump around. Then things settled down, waiting for the big number on Thursday, which was the CPI. CPI is Consumer Price Index, which is really retail inflation. Now, retail inflation is what you and I are paying for goods, the cost of goods in the shops, okay, or at retail or end user inflation. Now that number was a measure on Thursday. It was supposed to come in also at around about 8.1% in the US, which is a 0.1% increase month on month, and it came in at 0.4 increase. So annual inflation was pushed to 8.2%. Now on Thursday, what actually happened is that the markets, the equity markets, the Dow, the Nasdaq, S&P, Russell 2000, Bitcoin, tanked. They all crashed. They all went down significantly. The Dow was down, I think, over 600 points at the low. And things like cryptos, Bitcoin, Ethereum, they all dropped. Bitcoin fell to 18,200. And then I went on social media and said, listen, the markets are really in a bad way. They're going to go down further and you should sell. And when I said that, the markets began to rally. They began to rise. And where did they rise? What caused the markets to rise when the inflation was so bad and was so negative? You would expect the markets to continue falling. And that's the beauty of financial markets. You never really know which direction they're going. So a lot of it's guesswork, and a lot of it is just understanding the flow. And some people use technicalities or technical indicators. But let's just go on a bit of fundamentals as to what caused traders to come in and start buying the market at those levels. So the real sector that started it was the banking sector. So what happened was that the banking sector looks overall at interest rates and said, yeah, interest rates are guaranteed to go up now at the next FOMC meeting by 75 basis points and maybe 75 basis points in December. Well, actually, what really fed through was also a risk of interest rates going up by 100 basis points at both meetings. Now, banks make money off their interest rates. They lend money out at a premium, and that interest rate feeds into the profitability of the bank. So when overall the banks have been sold off recently, the people look, or the investors look, and they say, wow, the banks are cheap. They're going to make more money off interest. So they pushed the banking sector up. The JP Morgans, Morgan Stanley, Goldman Sachs, Banks of America all began to rise. And what pulled up the rest of the market? The whole market, technology, retail, pharmaceutical, distribution, transport, all of them went up. Everything was green on the indices, the Dow, the Nasdaq, S&P, and the Russell 2000, which is the smaller index. Now, once everything turned green, the appetite for risk grew, and all the safe havens, which is the dollar, was sold off, gold was sold off, and equities began to rise. And the Dow turned around from a 600-point negative to an 827-point positive. So it moved up nearly 1,500-point turnaround all within one day. And so a lot of viewers and a lot of traders were asking, well, how's that possible? And why? Why did it happen? And the reason why it happened is because there is a view, which is, I don't agree with it, but this is the view, that the inflation is historical, but not looking to what goes ahead. And therefore, historically, it is an indicator, but investors and traders believe, and analysts believe, this could be the end of the inflation cycle. Why? Because they feel as though the Fed, which is the central bank in the US, is going to take more aggressive rises in interest as far as going forward, and therefore kill off inflation completely. I don't believe that's going to happen. I think inflation is here to stay and is likely to go well above 10% in 2023. Remember, the beginning of this year, interest rates were close to 0 or 0.25, and everyone or no one could believe that they'd go above 1% by year end. And then I was stating back in January, February, March, April, rates are going to go to 3.5%, 4%, 4.5% by year end. And most people didn't accept it, most people didn't believe it, but that's where we're at. We're at interest rates whereby they are running at 4.5%, and maybe even higher by the end of the year. But 2023 likely to go to 7% because inflation is likely to rise. Looking at inflation as a measure, you've got several factors, geopolitical, that have an impact. Besides the Russia-Ukraine war, which had a big impact earlier on commodities and oil and gold and soya and beans and corn and wheat, etc. You've got other factors like China, which is threatening Taiwan, and Russia threatening with not only nuclear war, God forbid, would be the worst thing possible. You've also got Russia threatening Moldova, Belarus, and maybe Lithuania. So it could invade Belarus and Moldova to teach the West a further lesson, especially when they see inaction from Joe Biden and Kamala Harris. There's nothing going on. So they're just continuously testing the West. Now that's going to feed into inflation because the supply lines are going to become tested. Remember, China, which was a lead producer back in 2008, 9, 10, China saved the world. I've said this over and over again. China saved the West by ordering non-stop commodities, whether it's oil or whether it's metals or precious metals or basic commodities, coppers. It saved the West from going into recession, and that pulled all the economies up, as well as quantitative easing and as well as lowering interest rates. But China's not there now because China is losing their edge because the pandemic in China has caused a lot of lockdowns, and therefore their supply chain is so disrupted it will take years for them to get back online. The next real competitor with China is actually India, and India will probably take over most of China's business. But getting back to inflation, you've still got that supply-driven problem of inflation in the world, and that's going to continue burning through. I don't believe yesterday's bounce or today's bounce is going to have any significant change in the overall trend of a bear market, but it is a one-day bounce, and a lot of traders went on the back of it. They got this FOMO, the fear of missing out syndrome, where they went and bought the market scared that this is the bottom and it's going to move forward. It's not the bottom, in my opinion. It's going to go much, much, much lower. However, it was a big bounce, and that has caused a lot of questions amongst viewers, which I thought hopefully I've answered within this session. Now, if you want any further information or any further questions, then you can subscribe, you can text me on the YouTube channel, you can text me on WhatsApp, you can subscribe to Instagram, which I also do on a regular basis, and hopefully that'll give a bit more information. I will look to do more of these educational YouTube broadcasts. Please tell me if you like them. Please tell me if you want more, what content you'd like me to cover. I'm more than happy to help. Okay, Mayor Walensky with Driving Markets. Have a good day.